All right. Good morning, everyone. Let's get started. All right. Last night, U.S. market had a tough session. During the main part of the session, to say the least, a couple, marquee stocks, I would say, that really led the downturn. Those were Caterpillar and Microsoft. We also had Procter & Gamble came out with soft earnings as well. But the bottom line is those were kind of the driving forces, the big technology stock, Microsoft, and the big industrial, big global bellwether, Caterpillar, both coming out with soft earnings. And Caterpillar, really soft guidance, to be honest, put the market under real pressure, strain yesterday. I think it led actually global markets down a little bit to an extent. Our market held on pretty well. European markets had a healthy correction there yesterday also. One of the interesting things that kind of was an outlier yesterday was the euro strength that we saw. So I think that really puts into context that at the moment the market is very happy with the dollar rallying, and that's kind of a bullish sentiment in the market, and they're when the dollar is weakening, it's risk off. So that's kind of the way that I think we can look at the market until something changes there. We did have a handful of let me not skip the durable goods orders yesterday. Actually came out really soft durable goods order yesterday as well. So the combination of all of that really putting the market under pressure. Earnings season as a whole has been soft. I've mentioned that the last handful of days is just kind of getting deeper and deeper into it. It has been soft. You can't mix there's no confusion about that. It's been softer than expectations as a whole, and that's I think going to start to put pressure on U.S. markets. A lot of that probably because of foreign currency earnings or effects, but that's something that we got to monitor going forward. Another thing, yesterday after hours we did get a series of good data points. We had AT&T, we had Yahoo, and we had Apple. Yahoo earnings actually weren't great at all, but they are unbundling their Alibaba stake, which everybody's been wanting them to do forever. It's probably going to be a nice value unlock for them. Apple absolutely killed it on iPhone 6 sales, coming out better, almost 10 million better than expected. They also complaining about currency, which should be a bit of a no-brainer, to be honest, because obviously the bulk of their sales are in other countries. But iPad sales also looking a little bit soft. They're up about 5.5% after hours on the back of the iPhone numbers. All right, let's get into the Asian session. Shanghai was the outlier there, being down on the day today. We had the Australia market, which eked out a small gain, and then the rest of the markets were up close to 0.5%. So there was no considerable leadership. I think that we got a bit of a relief after hours with Apple. I don't think that the markets would be looking as healthy if the S&P futures weren't bid up so much this morning, which is obviously in large part due to Apple. And anyway, we continue to see the same thing. One of the things we did see out of Australia is the CPI actually still hanging in there. It came in at 1.7 for the fourth quarter, which is quite surprising. I would expect CPI there to start to drop again. Some strength in the Aussie dollar here, probably a good place to look to put some shorts on the Aussie dollar. All right, charts of interest for the day. So we've got the S&P 500 12-month forward EPS just absolutely diving, and this is what we're talking about here. So these guys are coming out with with solid numbers. I think relatively solid numbers. The guidance has not been great, and we're starting to see how there's a big divergence between the EPS guidance going forward and what the stock market's doing. I'll promise you that will not last. So in my mind, one of the things that I think we've seen happen over the last few sessions, and that's starting to take shape. If you guys remember, and I was probably a little bit slow to come to this conclusion, but if you remember, a couple years ago when the U.S. started throwing all of the QE at the market, the Fed started to throw QE all over the place. the U.S. was just outperforming the rest of the globe. I mean, it drug everybody up with it, but it was outperforming to an extent, and over obviously the last couple of years also kind of outperformed. I think that was in large part due to the fact that we kept the dollar weaker at the time, and so we were also pumping money into the economy. Now the opposite effect's happening. The U.S. dollar is strengthened, but considerably against every major currency. I mean, you look across the board to the things like, the Aussie dollar, the Euro dollar, the U.S. dollar, yen, every basket you look at, the dollar has strengthened against. And that's a headwind for all of these companies. And you factor that into the fact that a lot of these other countries are cutting interest rates, and now the ECB is doing stimulus and that sort of thing. I actually think that there's a real case for we've already seen a shift into some of the European markets, obviously with, before yesterday, German market rallying 14% in 14 days. But when you take that out of the fact, we still haven't seen the U.S. market fall. I still think there's going to be some capital that's going to come out of the U.S. stocks, and it's going to go elsewhere at some point here. So just keep an eye out for that. All right. This morning we have Kumba Iron Ore fourth quarter sales release, as well as Anglo American fourth quarter sales release. Then we've got Boeing out in the States later today, as well as Qualcomm. In terms of market data, we've got very little. We've got consumer confidence out in Germany at the open. We've got mortgage apps in the States and the FOMC rate decision. So not a whole hell of a lot going on. We'll be obviously waiting for commentary from the Fed this afternoon. All right, let's get into the maps. First thing that we want to have a look at this morning, if you looked yesterday, I mean, that's the chart on Caterpillar. I mean, look at how big this gap is. We're down 7+% on Caterpillar on the day yesterday. It's kind of weird because we basically opened and closed at the same level, but we went all over the show intraday. This is a shocking chart. You can see how we've just imploded off of the tops. The guidance yesterday was really soft. I'm personally kind of hoping that we get a bid out into some of these miners this morning. Might be a decent place to fade. Still got nothing out of copper. Still got nothing out of oil. There's been no follow through from that QE there that makes me think that anything's going to change with regard to these guys. It's Caterpillar forecast for the full year. It was really shocking. They're forecasting revenues to be down as much as 10%, by $5 billion. That's a revenue line. That's not even a profit line. So that's a big decline year over year. For year, it's already been soft. That's why the share got hit so hard. That can obviously transform into Barlow's, which is already kind of shaping up. We showed this chart yesterday. This is already looking to me very much like a bear flag anyway, and we're right at the bottom of that range. We drop out of that. I think we take out Lowe's. I think we take out Lowe's this morning. At some point, Lowe's are down around $85 on the recent lows and Barlow's. I think we wipe that out today. So just watch it closely, because it could be some nice downside on Barlow's on the back of the Caterpillar. One of the things that really stands out in the market at the moment, obviously, is the banking stocks. These things have just gone crazy. In the last 5 sessions, you've had FirstRand, which moved from just south of 40. I think it traded at 46.90 here 5 sessions ago. Now it's 51.28. So that's a hell of a rally with no non-specific news, no really specific news for the sector in general, obviously. But don't stand in the way of these things. You get your face ripped off. Standard Bank doing the same thing here, taking out new all-time highs. BGA also, I mean, it's been taking out all-time highs for a little while. We showed this on the breakout a few sessions back. It's just absolutely flying. Nedbank, same sort of thing, taking out highs. So I think we're kind of starting to see that same theme again. The interest rate sensitive stocks really playing out well at the moment, running hard to the upside, with the rest of the market struggling to get its footing right now. The last one thing I'll have a look at is bulletins. So this could be didn't mean to do that. This could be an opportunity to sell from here, or it could be a breakout. But either way, if we come up and we test this level again, 255, I think it's looking interesting. You're kind of looking a little bit inverse head and shoulderish. I'm not a believer in the stocks, though, so until it would prove this, I would never front run it. Obviously, we get back below 240, and I think that it starts to get offered again. So just watch it out of that range. I think that there's going to be some really interesting action here in the next few sessions, and like I said, if the physical commodities don't get up in the next couple sessions, I think they'll resume the downtrend very quickly. That's it for today, guys. Good luck out there.